Well, thanks for taking the time this morning, Alicia. One of the things I'm really intrigued by in this kind of really market environment right now is not so much the volatility to the downside, because let's be honest, this is part of the normal cycle that never really feels normal in the short term. What's really intriguing as we look at the data every day is looking at the consumer sentiment data. And there's a link to this file in today's video. Talk to us a little bit about consumer sentiment, kind of where it stands today relative to the previous 2 years, mainly COVID, and that of history in general.
Sure. So consumer sentiment right now is very pessimistic. Looking at the University of Michigan index coming in, the sentiment reading is at the lowest point going back to 1978 when it began, even lower than the global financial crisis and even lower than the COVID pandemic. We're seeing consumers really pessimistic around high inflation, increasing interest rates, the Ukraine and Russian war. They're just very pessimistic, and we think that is overdone at this point.
Yeah, it's pretty interesting to see that relative to the worst crisis since the Great Depression and relative to the COVID breakdown, consumer sentiment today is at a just historic low. It is baffling and notably a contrarian indicator. As we look ahead, right, there's no crystal ball, and we're the first to admit that in our entire investment team at the firm. However, using that historical backdrop of current levels of sentiment, what may this imply on a forward-looking basis as we look ahead at the next maybe 12 to 18 months?
Sure. So when we look back at history, when we look at prior troughs and market cycles, and then look ahead at the S&P 500 returns 3, 6, and 12 months later, we see notable upside opportunity going forward. In the past 16 cycles, after a 3-month return on the S&P 500, we're seeing average returns around 7%, with the percentage of positive returns at 88%. Going out to 6 months, it's over 13% average return, with 100% of those occurrences positive. And looking out at 12 months, it's over a 22% return on the S&P 500 12 months later at 94% positive occurrences.
Right. So let me just rephrase that. And so looking at the data, right?
Yep.
What you're saying is 12 months later, what we have experienced at such troughs in the consumer sentiment data, 94% of the time, we've seen the market gain an average of 22 to 23%.
Correct.
Yeah, I mean, that is not a crystal ball announcement, right? That is just historical data. Mm-hmm. And what I find fascinating about the consumer sentiment data at the current levels is the fact that consumers, from a fiscal standpoint, whether it's savings in their bank accounts, whether it's willingness to travel, I don't know if you travel lately, TSA lines are out the door, ability to go out to restaurants, ability to have discretionary income for car purchases or anything like that. All of that data looks notably healthy, mm-hmm. Yet we're seeing consumer sentiment being muddied by inflation and by the kind of exogenous war in Ukraine, mm-hmm. that I think is indirectly and probably unfairly impacting sentiment. So I think the next data point comes out, I believe, in a couple of weeks. Yep. In the July timeframe.
In July.
Certainly we'll be keeping an eye on that. As we finish up on that data and as we release this research, talk to us a little bit about what we're doing as a team on the equity market participation front in terms of relative to fixed income, that is, as we look at the next 12 months.
Sure. So we are still overweight equity market participation over fixed income. We think the fixed income environment is going to continue to be a very hard environment for investors to go through. We've already seen a lot of downside. We see possibly more downside coming forward on the fixed income front. We're a lot more bullish on the equity side.
Yeah, I never thought that a year like this year would be tax loss harvesting more on fixed income than some of the equity stock market mm-hmm. Exposures. So it's been quite interesting.
Yes.
Great. Thank you very much.
Thank you.
For taking the time. Mm-hmm. And please take a look at the sentiment research by the investment team. And we'll have more coming here later on in July.